Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Global ratings agency S&P upgrades India's sovereign credit rating to BBB with a stable outlook. S&P says the impact of higher US tariffs will be manageable, expects more fiscal consolidation as it believes growth is well on track. The Sensex and the Nifty snap a 6-week losing streak despite a flat close on Friday. All sectoral indices gained this week, barring FMCG. 38 out of the 50 Nifty stocks end in the green. President Trump warns Russia's President Putin of severe consequences if he does not agree to a ceasefire in Ukraine ahead of the Friday summit in Alaska. Ukraine's Zelensky meets British Prime Minister Keir Starmer in London as EU leaders urge Trump not to cede territory to Russia. India is fully engaged with the US on trade negotiations. Commerce Ministry says talks are on at different levels with less than 2 weeks to go for the 50% tariffs to kick in. India and China speed up efforts to rebuild bilateral ties. Bloomberg reports both nations are in talks to reopen border trade. India's Commerce Ministry says trade development is moving positively with growth in exports and imports. ICICIBank reduces the minimum balance requirement for savings accounts from 50,000 rupees to 15,000 rupees for urban areas after a backlash. The limits for semi-urban and rural areas also been cut.
If I have to have a bed in my house in where I stay with my father, then I have to dream to be in the top 2, and we all will dream to be in the top 2 and to build this company.
But Jindal reiterates the ambition to climb the pecking order as JSW Cement lists on DalalStreet, ends the first session with minor cuts. Shares of more than 15 companies have suffered a single-day decline of more than 15% so far in 2025. CNBC TV 18 analyzes a majority of these stocks, including ICICIBank Bank and PNB Housing, yet to reclaim lost ground. Election Commission admits 65 lakh names have been removed from the voter list in Bihar. The Supreme Court directs the poll body to publish the names on the website in a searchable format. The apex court says citizens should not be at the mercy of block-level officers. At least 12 people feared dead after flash floods in Jammu And Kashmir's Kishtwar district. Heavy rains also lashed Delhi, disrupting road, rail and air traffic. Well, let's go straight to the top story this evening. Global ratings agency S&P has upgraded India's sovereign credit rating to BBB with a stable outlook. The credit ratings agency has said that the impact of higher US tariffs will be, and I quote, manageable. It also expects more fiscal consolidation as it believes growth is on track. Ritu's here with more from S&P. Finally, an upgrade coming in there from S&P. Ritu, take us through the history of how India does and how it compares to Moody's and Fitch when we talk about S&P's outlook.
Well, Shireen, it is a landmark move for India's economic story. S&P upgrading our sovereign credit rating to BBB from BBB minus with a stable outlook. Keep in mind, this is India's first rating upgrade by S&P in nearly 18 years, and it signals a stronger vote of confidence in the nation's economic and fiscal trajectory. Now, for perspective, S&P's new rating is the second lowest investment grade rating. It is just one notch above Fitch's BBB minus and Moody's equivalent Baa3, both of which again sit at the lowest investment grade level. Now, if you look back at India's rating history, S&P first gave India a rating in 1990, that is before the reforms, and that was at BBB. The 1990s, of course, saw some setbacks. The rating slipped to BBB minus in 1991, then again to BB plus the same year, down to BB in 1998. From there, we climbed back all the way to BBB minus by 2007, which is where our rating has now stayed until the long-awaited upgrade today. We're essentially, in a sense, Shireen, back to where we were in 1990. Now, S&P says the upgrade reflects a buoyant economic growth, improved inflation control, and a clear commitment to fiscal consolidation. India, it says, has staged a remarkable comeback from the pandemic, clocking an average 8.8% real GDP growth from FY22 to 24, the fastest in Asia Pacific, and it is now projected to grow around 6.8% annually in the next 3 years. Public investment is a key driver. Central government capex spending is set to hit 3.1% of GDP next year, which is more than 50% higher than a decade ago. And at the same time, fiscal deficit is projected to narrow. Debt to GDP could fall from 83% to 78% by 2029. Now, what does it mean in terms of immediate benefits for India? First and foremost, it is going to bring down our cost of borrowing. That is very important for the country. And of course, it will trickle down, the corporates borrowing overseas as well. It boosts the confidence in our long-term growth story because, this is a long overdue acknowledgement of India's stable macroeconomic fundamentals, whether you look at GDP growth or you look at the fiscal consolidation and even the inflation control. And now we have to see if other rating agencies will follow suit.
Yes, that is the big question. Will the others follow suit? Ritu, thanks very much for joining us. And to take this conversation forward, we're joined by Yifan Vuo, Director, Sovereign and International Public Finance Ratings at S&P Global. Yifan, many thanks for joining us on CNBC TV 18. The very first question to you, it's taken 18 years for India to get this ratings upgrade. Why that long, Yifan?
Hi, Shireen. Thank you for having me today. Yeah, I mean, if you look at India's rating trajectory over the past 18 years, as you mentioned, there's been ups and downs. But I think for us, we really take a much longer term, view to this sort of things. The outlook has changed a couple of times, but I think this time round, if we've been recognizing the strong efforts that the government has put into economic reforms, at the same time driving growth, at the same time also allocating a lot of the spendings towards infrastructure as well. And all this has helped to really boost economic growth in the last few years. And we are starting to see a lot of this economic growth numbers flowing on into credit metrics and helping to paint a much better trajectory going forward. And that's the reason why we have acted on the positive outlook, which we started last year, and acted upon it this year to upgrade India to a BBB flat.
Well, Yifan, you talked about the macroeconomic stability. What is it that you like the most about what India has been able to do in terms of infrastructure spending, in terms of inflation control, and so on and so forth? What about the macros do you find most comfort and confidence in?
Yeah, you have touched on a very important point for us, which is the growth story, right? It's been very stable in terms of growth. India has been through many cycles, up and down, but throughout it all, I think the government has done very well to maneuver the economy, right? I think the sheer size of the economy, the very healthy growth, the strong domestic consumption, all these are factors to overall help to build the story as well. As for infrastructure investment, I think that's very admirable for the government in terms of how they have been, as a share of the budget, allocating less towards subsidies, but putting it towards more productive use like infrastructure investment. And as these infrastructure investments come forth and bear fruit, we do believe that it can actually help to lift India up to an even higher economic trajectory versus what it's seeing right now.
Right. I want to address the issue of the tariffs that the U.S. administration has imposed on India, 25% currently, with the threat of an additional 25% by the 27th of August, if, of course, there is some sort of a middle ground negotiation achieved between both sides. If it were to be 50%, you still believe that that will be manageable, in your words. Can you explain to us what the impact is likely to be and why you believe that India should be able to ride through this?
Yeah, hey, thanks for raising that question. I think for us, if you see India, it's an economy that's not extremely trade-oriented, right? If you look at the exports to GDP, in terms of exports to the US, it's only about 2 or 2.2% of Indian exports goes to the US. And once you factor the fact that there are sectorial exemptions on certain products like pharmaceuticals and also consumer electronics, ultimately, the exposure to the US in terms of GDP of the exports is only about 1.1%. So therefore, even with a 50% tariff, if it was to go to that high, we don't think it will overly impact the growth story. A lot of India's growth is driven by domestic consumption. And it could have some sort of a short-term impact on growth, but that impact we expect it to be small and manageable. But over the longer term, we do think that the long-term economic growth prospects of India remains very, very strong.
Well, Yifan, this is Ritu just stepping in as well. In terms of specific fiscal, milestones or growth numbers you'd look at, what are the, specific steps that India would have to undertake or targets India would have to achieve to consider the next upgrade now to BBB+?
Yeah, I think we've pointed out in our outlook statement of what it would take to get to the next level, right? I think one important thing is further fiscal consolidation, right? That's one of the factors that drove the current upgrade, which is we see a very strong political commitment from the government to consolidate the fiscal balance. I think going forward, the state government finances will be something that we'll be watching out for. We recognize that the central government, the deficit has been declining quite quickly. But if you look at state government deficits, they have not been declining as quick as the central government. And in our rating methodology, when we look at the fiscal deficits, we look at it from a general government's perspective, which is the central plus the states. So I think if the state government is able to consolidate even quicker, I think that could help to bring about further upward rating pressure.
Well, quickly, how should we reconcile S&P's rating upgrade with that of, with India's rating where, as far as Fitch and Moody's are concerned? I mean, what is the specific metric you looked at where India stood out? You think, the other rating agencies have not looked at?
Yeah, unfortunately, I won't be able to comment on the rating methodology of other rating agencies. But what I can speak about is to really focus on one of the key strengths that we look at for India, right? I think for us, one of the important strength that India has, which is also a very large weightage in our rating criteria, is actually on the external position. India scores very well in that. Current account deficits has been very small. It's been covered by FDI flows in the past and portfolio equity flows as well. And the central bank has accumulated a high level of reserves. And overall, one important thing also is the government doesn't borrow in foreign currency. So all in, you're looking at an economy with a very high level of net external asset position. So that actually places India very strongly in our external scoring. Fiscal, as you know, the scoring is still quite weak. Monetary assessment is one thing that we also look at as well. I think, as you also mentioned earlier about the inflation coming under control, I think that also signals monetary policy getting better in India, which is more conducive to strengthening transmission mechanism from the RBI. The very high growth that India enjoys is also something that we also take into account into our consideration. If you look at India's high growth numbers, it also signals that it's able to have that strong flow-on impact into debt and also towards fiscal numbers as well. So all this helped to moderate the fact that despite still wide deficits, that the GDP is still coming down gradually because of strong nominal growth.
Well, you talked about the factors that have helped in S&P moving as far as India's outlook is concerned, and with that upgrade coming in. If I were to ask you about some of the risks that you foresee, as we talk about the growth story as well, Yifan, what would be some of the key risks that you would watch for?
So I think key risks is, of course, if the government starts to not focus so much on fiscal consolidation, if the government starts to, have decided that they need to spend a lot more, I think that could be something that we will watch out for. But one thing also is the quality of spending of the government. That's something that we've mentioned in our reports quite a few times about how we think that has been improving quite a lot in the last few years as they tilt more and more towards infrastructure investment. So let's say if deficit starts to get even wider, and at the same time the quality of government spending actually reduces. They start to spend less on infrastructure instead to put more into subsidies and things like that. I think that could be a sign that this could be a sign that this could be erosion of political commitment to push through reforms. I think that could be a sign for us potentially to be a downward pressure on the rating.
Well, so far, at least S&P upgrading India's credit rating to BBB from BBB-. It's taken 18 years. We hope it won't take another 18 for the next move, which hopefully will be moving up the investment grade. Thanks very much, Yifan, for joining us here on CNBC TV 18. That's S&P with its outlook on India and why they have upgraded India's credit rating. We will head into a short break, but up next, India is fully engaged with the US on trade negotiations. Commerce Ministry says talks are taking place at different levels with less than 2 weeks to go for the 50% tariffs to kick in. That and more when we return. Well, let's talk about the market action for the day. The Sensex and the Nifty closing flat with financial stocks lending some support. Mid-caps underperformed today. The market breadth in favor of the declining stocks. For the week, the market snapping its 6-week losing streak. That's the Nifty absolutely flat and the Sensex as well. For the week, the Nifty closing 1% higher. Similar story for the Sensex and the Nifty Bank, higher by about 0.5% or so. Remember, it is a truncated week as we are closed for Independence Day tomorrow. The other big story, India's Commerce Ministry says it is fully engaged with the US on trade negotiations. The ministry official said talks are taking place at different levels. Now, this comes with less than 2 weeks to go for the 50% tariffs to kick in. An External Affairs Ministry spokesperson says India is hopeful the partnership with the US will continue to grow based on mutual respect and shared interests.
हमारे दोनों देशों के रिश्ते एक कॉम्प्रिहेंसिव स्ट्रेटेजिक पार्टनरशिप है। जैसा कि आप जानते हैं, ये जो हमारे रिश्ते हैं, द्विपक्षीय रिश्ते, ये आपसी इंटरेस्ट यानी कि शेयर्ड इंटरेस्ट जो हैं दोनों देशों के लोकतांत्रिक मूल्यों और हमारे दोनों देशों के लोगों के बीच में जो परस्पर बहुत मजबूत रिश्ते हैं उन पर आधारित हैं। ये रिश्ते कई एक ट्रांजिशन और चैलेंजेस को इन्होंने देखा है, इसका सामना किया है। अभी हमारा उद्देश्य है कि हमारी जो सब्सटेंटिव एजेंडा है दोनों देशों के बीच में, उस पर हम अपने को केंद्रित रखें और ये हमारा मानना है और आशा है कि ये साझेदारी आने वाले दिनों में म्यूचुअल रिस्पेक्ट और शेयर्ड इंटरेस्ट के बेसिस पे ये आगे बढ़ती रहेगी।
Meanwhile, India and China are in talks to resume border trade after 5 years. As per Bloomberg, both countries have proposed to restart trade via designated points on the shared border. China's Foreign Minister Wang Yi will be travelling to New Delhi next week in a bid to further ease tensions. He's scheduled to hold talks with Foreign Minister S. Jaishankar as well as the NSA Ajit Doval. India's Commerce Ministry has said that trade developments with China are moving positively with growth in both exports and imports. US President Trump has warned Russian President Vladimir Putin of very severe consequences if Russia refuses to agree to a ceasefire with Ukraine. Now, the warning comes ahead of their first meeting in 6 years, which is set to take place in Alaska. Trump made these remarks after conducting a virtual meeting with European leaders, including Ukraine's President Zelensky. European leaders urging President Trump to ensure that any peace agreement does not sideline Kyiv. Take a look.
Will Russia face any consequences if Vladimir Putin does not agree to stop the war after your meeting on Friday?
Yes, they will. Yeah.
What will the consequences
there will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
There will be consequences if Russia doesn't agree to a ceasefire. That's President Trump. Remember, there will be a press conference, a joint press conference between President Trump and Vladimir Putin after that meeting that takes place in Alaska. And that'll be sometime late Friday night, early morning. And of course, we'll be tracking those developments right here on CNBC TV 18. The big story from the Supreme Court. The Election Commission has admitted that 65 lakh names have been removed from the voter list in Bihar. The Supreme Court has directed the Election Commission to publish the names on the website in a searchable format. The top court has said that citizens should not be at the mercy of block-level officers. Ashmit joins us now with more details. Ashmit, a breakthrough there for the petitioners, relief coming in for the petitioners. Take us through what the Supreme Court has said and where does this now leave the Election Commission's electoral revision exercise for Bihar?
Well, indeed, an important breakthrough. This was the very relief that a number of petitioners had been asking for, that the exclusions that have been made, at least let's put them on record, let's make them public, let's give the public an opportunity to verify for themselves what their current status is as a voter on the election card, on the electoral rolls. Now, bear in mind, the Election Commission began its arguments today where it clarified that They began with 7.89 crore voters in the state of Bihar. That was whittled down to 7.24 crores, thereby meaning that 65 lakh names were reduced. When being asked as to why these exclusions were made, the Election Commission responded by saying that there were instances like in the case of 22 lakh names that were removed on accounts of deaths that were taken place. Now, petitioners have been arguing at length how there are a number of cases where dead people have been shown to be alive and alive people have been shown to be dead. And this was something that was cited by the Supreme Court as well, which raised questions about the quality of decisions that have been made at the block level, officer level for exclusions that have been made. So to that end, the question that was asked by the Supreme Court is why not have more transparency? Why not have the Election Commission publish the data in a searchable format that will allow the voters of Bihar to search online for themselves to be able to see whether their name is on the list or if it's off the list, and if it's off the list, what needs to be done to bring it back online. So towards that end, the Supreme Court giving a very specific direction that 3 days' time is what the Election Commission has to publish the data of 65 lakhs names that have been excluded. To publish that on the website has to be done in a searchable format where you and I, as a voter from Bihar, can search online. Not just that, even the block level officers will be required to put up this data at their respective offices, again giving voters a chance for verification. But that's not all. What's another important aspect as a part of today's hearing is that the Supreme Court, on the third time, they have nudged the Election Commission to go ahead and to accept Aadhaar. Election Commission so far has been refusing to accept Aadhaar as a means of verification. Today, for the third time, the Supreme Court has asked the Election Commission to allow for the use of Aadhaar for verification of electoral rolls.
All right. Many thanks, Ashmit, for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC TV 18. Stay tuned. We're back in a moment.